Hello and welcome everyone to the second day of the 2022 Digital Container Summit. Today in this session titled Piecing Together Container Leasing, we're going to discuss what is happening in the global container leasing market of marine containers. We have two guest speakers with us today, and we'll dig down into the international shipping market, how it has and will continue to affect the leasing industry. We'll touch on the recent demand of one-way containers, new production of containers, and the future of the global fleet, specifically as it relates to the retirement of containers. I'd like to remind everyone that this session will be recorded, and we'll send you the link to it after the event is over. Feel free to ask any questions in the chat during the session itself, and we'll try to answer as many as we can. We'll also have some time at the end to open up for some questions to go back and discuss any areas you'd like to. If we don't have time to answer your questions during the session, we'll be sure to get the answers from our speakers after the session is concluded, and we'll include them in the PowerPoint, which will be made available to you in the link. Just a couple of housekeeping items. I want to remind you all that the questions can be asked in the chat area. And I've been asked by the organizers that you answer the four questions in the polls tab on your screen there. You can do that either during or before you exit the screen. So with that, I'd like to introduce our panel members. First, we've got Gregory Van Stridnik. And actually, Greg, why don't you pronounce that for me?
So it's Greg Van Stridnik.
Okay.
Thank you for having me.
No worries. So Greg is the Associate Account Manager for Exchange Plus Product. Greg has a background in logistics and the maritime industry through exposure to container depot operations in Antwerp. He joined Container Exchange at the beginning of 2022 to help drive the success of its clients. Having a continuous exposure to the market and monitoring the fluctuations of container prices and movements on their platform, it gives him a great knowledge and overview of what has recently taken place and is happening in the current market. So welcome, Gregory.
Thank you so much.
And then we have Supal Shah. He's the CEO at Arcon, a container logistics company. Supal is an accomplished strategic management professional with 23 years of distinguished experience in shipping and logistics, with core strengths in IT process, finance accounts, strategy, global business development, container trading and leasing, and overall business management. At the present time, Supal is heading Arcon, which is a digital startup reimagining the space of container logistics. He's been the driving force behind the creation of Arcon, which is solving a few of the biggest pain areas of various stakeholders by developing a unique business proposition of one-way container movement and container trading with its phygital approach that will reduce the overall container-related logistics costs. So hello, Supal, how are you?
Thank you, Mark. Thank you. Pleasure.
Supal, I have to ask you, can you tell us a little bit more about this phygital approach? Am I saying it correctly?
Yes, Mark. Once again, good morning, and thank you. First of all, Mark, you are from USA, so I do understand it's too early for you to moderate this program. But good morning, good afternoon, and good evening, my friends across the world. So at Arcon, the Arcon is born with a real life experience while I was managing the global container fleet at Serjak Container Lines, wherein I do realize that the rectangle box has a quite challenge, especially imbalance and the surplus and different prices of the same container in different markets, right? And it drives between the demand and supply economics. And that's, again, there are a lot of process which is outdated, whether it is releasing the container, exchanging the container between the two stakeholders, because we are a global, right? I sit in India, and if I want to do a business with the American client or the client in Europe, how to establish the trust. And that's exactly where we started with the vision of reimagining container logistics at Arcon, wherein now we have a research lab Answering your question, Mark, what is a phygital? So I strongly believe in shipping and logistics, we will not be able to accomplish 100% digital because still we have many stakeholders to work together. And at Arcon, we are investing in a technology with the physical touch where we do not wish, we want our customer to talk to us. We want our vendors to talk to us. And that's exactly where we will keep pushing all our processes, all our digital platform, keeping in mind the phygital approach going forward. Also quickly introducing Arcon, what we do, while very shortly we'll have a digital platform which will further ease out the process of buying and selling containers. Booking one-way container, again, on a click of the button with the mobile app, we would further like to improve the overall experience of booking and using one-way containers. And most important, friends, a digital depot, where at present, releasing container at the depot is quite a time-consuming exercise. These require a lot of time. Again, you need to coordinate with the depot, with the truck operator, and that's exactly where Arcon is working to further improving the overall experience and pain area of the industry. Yeah, so over to you, Mark.
Well, listen, Supal, if you can solve that that experience at the gate at terminals and depots, I mean, that's going to be a home run because that's been a problem forever. So Greg, just very quickly, you want to give us just a little bit, you've got a lot of experience now, understanding a lot of the one-way moves of equipment and et cetera. What specifically are you doing there at Exchange that gives you that that knowledge?
Yeah, sure. So good morning, good evening, everybody. Exactly. So I joined Exchange earlier this year. I had some experience in, as you said, the depot operations when I was still a student, and I wanted to, push that through. I knew this was my industry. I want to learn what's out there and how the market is changing, and I think no better place than Exchange to do this because of this wide range of possibility, the wide range of clients that are on the platform. As Supal said, Arcon, it's a perfect example of companies where you can learn from and see how they navigate this market, so to say. So I joined Exchange as an associate account manager, and sorry, essentially I joined kind of a special or like separate entity called Super Concierge. We rebranded to Exchange Plus right now. And basically the idea is that we are kind of offering a premium operational support service. So we have a portfolio of clients, and essentially they join with specific requirements. We have a weekly touch point or regular touch points, and the idea is to basically translate their requirements onto the platform and try to achieve what they are willing to, or like looking to achieve on the platform. This is, I mean, we're talking about OneWay, but this is also related to trading, for example, right? So we have a very diverse group of clients with very different types of requirements, different markets, different container types, you name it. And the idea is to drive this and pull this further. Now, if you look at the market, I have mostly been working on repositioning from ex-China to usually Europe or the United States or Canada, so North America in general. And this is what I've been doing now for the last couple of months. And it's been very interesting because, I mean, I'm on these accounts on a daily basis, and it really gives you a touch of like how the prices are changing. I think when I joined Exchange, prices in China were through the roof, and we see that right now they're almost halved. So this is a very interesting thing to see how everything's changing.
So that's interesting, and I think you're going to have some data for us here in the next little while here.
Yep.
And I think a lot of that comes from all of the aggregated information that you see. I think you touch on an interesting point in that production cost of equipment in the Far East is directly related to demand, right? Obviously. And then, the demand spills down to leasing. And then coincidentally, the majority of new container pricing for lease rates is based on new production. So all of this is very connected, right? Global demand for freight, and then freight pushes the demand for containers, then container production goes up, price goes up. Leasing companies have demand for equipment because they have to lease more, and so we'll go through that a little bit. And so let's start, having talked about this now. So let's get right into the global shipping market, because, and Supal, you have a pretty good feel on this whole subject, but we know that everything about container leasing is based on global shipping, right? Obviously. So as goes global shipping and the demand for freight, et cetera, so goes the utilization of leasing companies, the number of lease outs, the new container cost, lease rates, especially new production lease rates, and then certainly one-way rates. So Supal, can you why don't we just go back 18 months or so, or give us, the last year and a half or so, right to present, and let's give us some background as to how we got to where we are today. And then we'll talk a little bit about today, of course, and then before we end later, we'll talk about all these subjects and what we see moving forward in the future.
Thank you, Mark. Yes, before we touch upon the container one-way and the leasing, it is definitely very important to understand the background because the entire demand supply pickup charges for a one-way is having a direct correlations with the shipping freight. So we'll Mark, I'm not going to take you guys just for 18 months, but let's also understand our entire shipping industry passed through very rough weather since last almost more than a decade. And we have seen many merger and acquisitions. Shipping lines, which was earlier around 40 plus, now you can hardly count even 10, right? Which is controlling around more than 70-75% of the market share. Most of the shipping lines were not earning. Most of them were losing money because the ocean freight, I still remember when I booked one 40-foot high cube container from Shanghai to Santos, which is a port in Brazil, for a $50. And believe me, Mark, when I used to travel to Shanghai, from Shanghai airport to Shanghai city, I used to pay more than $50 for just booking one cab. And I was booking a 45 cube container from Shanghai to Santos just for a $50, right? That was the history. Fast forward, pandemic, probably the perfect recipe for a shipping line. Shipping lines reduced now, probably they have less shipping lines. Again, you have alliances between the shipping line. And pandemic stuck to us, and most of the countries globally entered into the lockdown, right? In a different part of the world, the entire supply chain was disrupted. There was an operational challenge which was delaying the overall movement of the container. So I'll just give you one example between the China-USA trade. Before pandemic, the overall transit time from China port to the USA West Coast port was 45 days. And you will be surprised that during the pandemic, because there was a lot of congestion, especially on the West Coast of USA, this transit time went up to 112 days. So believe me, now you imagine why there was a huge requirement for the container, because more or less the transit time has gone up by 3 times. So for that trade route, you require the similar 3 times container, right? So this is a little bit in the context of what has led to higher demand for the container. Definitely, what is the reason? Probably the freight has gone up. It goes without saying, I think pandemic has served the excellent recipe for all the shipping lines or all the stakeholders within shipping and logistics, because there was a madness for the demand for, there was a binge consumptions across the world, whether it is a laptops, whether it is an electronic cargo, whether it is a food items. Globally, most of the citizens prefer to buy in a lot, and this has led to a huge demand wherein all the shipping lines make the best out of it. But what happened and why the demand, while freight was going up, Liners were, because let's understand, China is the global production manufacturing hub for the world. They produce for the entire world. I'm talking about in a proportion. And China produce container, but the production capacity of the shipping lines, because the freight was so up, they were unable to reposition the container in time, which has led to the huge shortage of equipments in China, which is a major market for the world. Definitely, you do not have a container. Shippers, freight forwarders were dying for the container, and that's exactly where the freight rate has started going up. It went up to a level where I still remember many big freight forwarder, multinational freight forwarders started chartering their own vessels. Again, perfect recipe for a shipping lines. Freight has gone up, but now it comes to the container prices, right? Because there was a huge demand from the freight forwarder, because they also started chartering vessels, where definitely they don't know how to probably manage the overall container fleet. That's not their domain, but they started asking for more and more one-way container from China. I still remember a time where the pickup fees from the China, which was, very low, around $400-500 before COVID, but during the COVID time, it went up to $3,500, $4,000, right? Especially out of China to USA or China to European trade. So yes, that's exactly, especially during the pandemic time, shipping freight has gone up. Container price, definitely demand for container has increased, which is again, container prices has gone up. But fast forwarding today's scenario, I strongly believe the ocean freight has started coming down. I keep talking with many of my friends globally, and everybody's fearing the recession, that the freight will come down drastically. But to give you the peace of mind that ocean freight across all the major market is still better, better by 2 times, 3 times than what it was before pandemic. So I think, according to me, the freight continue to hold, good. And not to forget, right now, there is an election in China, so a lot of uncertainty. Once Chinese election is over, the Russia-Ukraine war has added fuel again to the disruption in supply chain. So asking myself, yes, I think I do not see that we will see the freight very shortly. We'll see the freight what it was available before COVID, but little moderations is required, and it is good for the inflations, because we all are suffering from, the world is suffering from the inflation which was created because of supply chain disruptions. So moderation is a freight is a welcome news for the world and also for the shipping and logistics. Over to you, Mark.
So it's interesting. You talk about freight forwarders, which had a huge impact on what took place over the last 24 months. In fact, we were seeing freight forwarders showing up with equipment here in the United States and really having nothing to do with it, bringing containers into the resale market, brand new containers, with no intention of being in the resale market, right? They were looking, I mean, maybe you can explain a little bit about that, and then maybe I'll kick it back to Greg to tell us a little bit about how freight forwarders got in the leasing business, not in the leasing business, but actually took space from leasing companies, right? In a way. So Paul, tell me, what was the integral part of the freight forwarder during this period that they never really participated in historically?
So, Mark, honestly, the big freight forwarder has their commitment to all their major customer, because they still need to pick up the cargo from various countries, especially from China, and need to deliver, for their customer. If as a freight forwarder, I'm not getting the shipping space, I'm not getting the container and the rate which I required for my customer, because all the commodity cannot afford to pay such a higher freight, right? So that's exactly where I think, so it's as simple as that. The shipping lines are trying to get in, probably they are trying to become a freight forwarder. And I think the pandemic has also shown that even a freight forwarders can also become a shipping line tomorrow, right? Now, I do not see, Mark, that the freight forwarder will able to continue by keep chartering vessels, right, for a longer time. So this was lead to a pandemic, but now I'm not sure whether freight forwarders would like probably to use more and more one-way container, and that we also see that the demand for one-way container has already started reducing. Pickup fees from China has already started reducing. So the role of freight forwarder to using an SOC container will keep reducing in the near future.
So Greg, why don't you tell us what was your experience with this sort of phenomena of freight forwarders getting into the actual, movement of the containers themselves, right? Not, they were acting more like NVOs, right? Rather than just regular straight freight forwarders, no?
Yeah, maybe touching upon Supal's point. Totally right. So the pickup charges have been decreasing like crazy over the last couple of months. And I think there is also this factor of COC versus SOCs, right? Where it's getting more and more attractive to use a COC as opposed to a SOC. And as you said, Mr. Supal, this is making a one-way container more and more competitive, right? Maybe not so much attractive anymore. But I think there are a couple of points that influence this. So essentially the rates are determined by the shippers, right? And I think there are a couple of, I mean, from what I saw from what has been going on the platform and from my clients, there are a couple of things that have been playing a role. And I think one is definitely the storage fees that people are starting to pay in China. So containers are stacking up everywhere in the world. And these storage fees are making it very costly to have a container being stuck in one location for a long time period. I actually heard not so long ago, I think yesterday or 2 days ago, of someone saying that shippers are essentially giving containers away, COCs. I think he mentioned Singapore, just because containers are stuck there and they're paying crazy amounts of storage fees. And so they, don't want to say give them away, but they give them for very, very low rates to westbound. So this makes it very hard for an SOC, or it makes it hard to use a SOC, and it makes it very hard to compete with that. I think as well, you mentioned earlier, Mark, what influences this industry is on a microeconomic level, right? So less cargo being shipped means shippers, I don't want to say have a hard time filling up their ships, but they will maybe tend to prioritize their own boxes. And I think also what we experience now is that we are slowly getting back into like a normalized economy, right? Where, for example, I remember a couple of months back when you saw satellite pictures of the port of LA and Long Beach, where you had tens or I don't want to say 100, but like a bunch of ships with thousands and thousands of containers just being stuck there, also makes the D&D costs, makes you think twice. Now, this is kind of back to normal or getting back to normal, meaning that this D&D costs it doesn't make the risk worthwhile. And so essentially people are, what I feel, are moving away from SOC containers and using more COC containers just because of it's more attractive, or it's getting more attractive. Right. Now, it also depends on the stretch. For example, I know train cargo, still a lot of SOCs. But yeah, this is basically what we've been seeing on the platform over the recent couple of months.
So let's talk about the global fleet a little bit, right? So we know that leasing, the leasing industry and the liner companies themselves, they account for probably what 96% of all the equipment in the world. And so what can you tell us about the global fleet? And what can you guys tell us about how many units were produced over the last 12 months, 18 months, and what's happening now at the factory? So that's sort of a multiple question. Let's start with you, Supal. What's happening with the global fleet right now?
Well, unfortunately, Mark, there is not a single report where you can get the exact number, but let's accept it. The major production happens in China. As per my report, as present, the global fleet is in the range of 52 to 53 million TEUs, globally. That's the total fleet. And giving you a breakup between the leasing company and the ownership, I expect 50-55% being owned by the leasing company, and the balance being owned by the shipping lines or the railway terminal operators, or globally, across the various use. So this is, you can say, around 30 million owned, and the balance being used by leasing company to lease the container to their customers. That's the total fleet size. Yeah.
And so, Greg, do you have some information for us about what happened at the factories from a trend standpoint on container pricing at all that would impact? I guess container pricing is a direct reflection of demand, right? Do you have some slides on that?
Yeah, let me first quickly maybe introduce on like how the factories were working. So I think I did my research, tried to get a bit of an hawk view on how production has been going, and I think on average over the last couple of years, round about 2 million containers or 2 million TEU were produced per year in China or on a global level, but I think 85 to 90% of world's containers are being produced in China. And it's basically the big three, right? So CIMC, Dongfang, and Sigamans that are basically building. I think I saw some numbers that in Q1 of 2021, they built 83 or 84% of the total production of containers. And essentially the idea is that right when COVID hits, so Q4 2019, Q1 2020, basically we had a little bit of a downturn in container production, but this quickly picked back up, right? So we were going from this 2 million per year, and actually saw some data yesterday that in 2021, as you said, Supal, way more cargo was being moved. There was a need for containers, and they jumpstart this number to around 6 million containers being produced in 2021. So that's a huge increase, and basically to absorb this buildup of new cargo needing to be shipped to the US, Europe, etc., etc., etc. So this is a little bit like how it happened, and this has been continuing going forward, and containers been piling up. I think I have a slide I can share you on container inventory in China. The timeline is not ideal, but let me quickly check. So essentially,
in the meantime, while we're looking for that slide, the demand for equipment from the leasing industry has been tremendous. I mean, the leasing companies are at the major leasing companies are at 98, 99% utilization. They've been that way, and we'll talk a little bit more. Go ahead, Greg.
Yeah, no, essentially what I wanted to touch upon is that so there was end of 2020, a lot of containers we had basically containers where less was produced, a lot has been being taken out of China, and basically the factories kept on producing. 2021 they produced a bunch of containers, and essentially now we get to a stage where maybe we got into a little bit of a recession, maybe less containers are being shipped out, the war, etc., meaning that containers are getting piled up in China. And we heard, I think it was 23rd of September, that basically the major factories in China announced that they will stop production and halt the production of containers for the foreseeable future. I heard 4 months, not sure if that's 100% correct, but essentially that's what's been going on. Maybe I can quickly also show one slide where we can see so container prices ex factory. So we also see that basically over the last couple of months, price has been decreasing tremendously. I think these are overall container price ex factory, but when we look at, for example, the platform, or what I've been dealing with on a day-to-day basis, and I think Supal, you also mentioned it earlier, basically we went from crazy prices in China in around mid-year, end of year 2021, where basically you'd be buying a brand new 40 high cube in China for around $7,000. Right now, this price has almost halved. I think the best price I've seen recently was 3,800, depending on the location in China as well. But so this is definitely something to keep in mind, and to see that, okay, prices are going down now that the factories are closed, and maybe inventory in China is going to decrease. we'll be seeing some changes in prices, right? So I would assume that the prices are going to continue falling up until maybe beginning of next year, Christmas time, once all these stocks are being, went through, and then hopefully the factories are going to kick in again, and then we'll probably see a price. At least it's going to, get back to a normal stage, and maybe also go up at a further point.
Some of this information can be a bit disturbing, I think, for some people who are in this space, right? You have what Supal mentioned earlier on, that freight rates have obviously come down. They may not be exactly where they were before the start of the pandemic, but I've heard reports, and what Supal's telling us, clearly demand is down out of China, freight rates are coming down. You now say, Greg, you're saying that factories potentially could close for months. All of this means, in my opinion, that there's been a huge demand for equipment, right? And I think from a liner company standpoint, they've been taking equipment into their fleet far in excess of what the optimum fleet size is, right? So if you look at the slot ratio compared to the number of units in their fleet, I think many of them would tell you that they have too many containers, right? So all of this happening in the market, added with the fact that there's, in many places, there's no storage. What's going to happen here, Supal, in the very near future with containers on lease to the lines? Are they going to be off hiring to the leasing companies? How are the leasing companies going to be able to deal with these containers coming back in, when I can tell you here in the US, there's no space to put them? So, and I think it's the same way in Europe.
Everywhere. Forget the Europe, right? It is same in the China. It is the same probably in most of the part of the world, including India. So, Mark, let's understand that the container prices has gone up, right? But then the most important thing, typically the shipping line use the container for 15 years. This is normal benchmark across the industry. Same is the leasing company. And once the container attain the age of 15, they normally ship the container for selling the same. So this was the typical practices followed by major shipping lines and the major global leasing companies. But in last couple of years, there was shortage of containers, so there was no off-hires. Why second-hand container price also has gone up? So there was a time when I paid $6,000 for buying a second-hand container in China, where the brand new container was available at that time at $7,000. So there was hardly any difference, right? So what will happen now? First of all, the old container shipping line, which they did not off-hire in last 24 months, they started off-hiring containers in thousands and thousands of TEUs. So as you rightly pointed out, the container depot will be flooded, will be flooded with the old container. The container prices, old container prices already started crashing. The worry is not about the price. The problem is there are no taker, So even if you reduce the price, the supply is so high compared to the demand. And that is exactly a little bit worry, especially for those player who are doing the business for a second-hand container. This is something that they need to keep it in mind, that maybe we will not be able to take out our capital soon. We need to wait. I'm not saying that we will not get the price. Okay, price will be reduced. At present, there is a less demand for a second-hand boxes because customers can buy the brand new container at an excellent price. So why they will pay probably, high price for old boxes? So price for second-hand container will further correct. All the leasing companies right now, they are not offering their old stock for leasing. They rather would like to sell those boxes because on their books, the prices of second-hand container is still better than what they were, able to get before pandemic. So I think this is going to be a dominoes impact where all the leasing company will not, offer their old boxes to the customer, and they will prefer to sell. So prices for second-hand boxes will go down drastically even further. This will definitely by default will put a pressure on container depot, wherein there will be operational failure, there will be delay in releasing the container. We already know right now there is a crazy situation in Hamburg where depots are chock-a-block. Same is situation in Ningbo and Shanghai. So I think again we'll see some challenges, especially on the depot front also because of this. So over to you, Mark.
Interesting.
Okay.
Go ahead, Greg.
No, yeah, I just wanted to, I had one question for you, Mark, and maybe one point also for Supal. So with regards to the depots, I heard from back home that essentially, as you said, right, the depots are so full that essentially, I think, depending on the depot, they oftentimes don't even, they used to not charge shipping lines for storing the containers because just there is just such a high turnover. The container comes in, comes out. They just charge for the gate in, gate out. But because they're so full right now, they're also going to start charging daily rates for shipping lines, which is actually also something that shows that they are chock-a-block not only in Hamburg but also in Toronto right now. I think New York, they're very full. Houston, I also heard. It's everywhere, Antwerp. And then maybe one question for you, Mark. So I was mentioning 2 million containers being built per year. Do you have some numbers or an idea of how many containers are being disposed on a yearly basis? How many containers are just thrown out of the equation?
So first off, Greg, I'm supposed to ask the questions, not you. I'm kidding. No, actually,
Pure
from my
curiosity.
well, from my experience, at any given year, disposals from the leasing side, and disposals work two different ways, right? For the liner companies, they're disposing equipment from an operational standpoint, right? They're buying the equipment. And they're utilizing it, and so their disposal method is based on the age of the unit, its utilized ability, and so forth. From a leasing company, it's different because a younger box could be disposed compared to a newer box, depending on where it's sitting and the ability to remarket that to another lease, right? So you might have a box in New York where you have far more imports to exports be sold at a much younger age than a box in China. With all that said, to answer your question, I think anywhere between 3-4% is probably a typical, could be up to 5% in some years. But I think we're in a unique situation right now because I believe leasing companies are going to be forced to sell more equipment and sell more equipment direct to buyers, because I don't know where they're going to bring this stuff. If they should have a drop. You know, you talked about a fleet size of over 50 million, Supal. If more than half of that is from the leasing company, and they have to dispose just their normal 3%, or if it gets really bad and demand gets very weak, we come into a potential recession, a global recession maybe, and they have to exceed 5% of retirement because they have nowhere to bring these boxes. Yeah, I mean, that's a big number. You know, it's so it's a daunting issue that the leasing companies I think are going to have to deal with here in the coming months and years even. So we'll see. I do have a question for you, Greg. Can you give us, when you look at the demand for equipment out of the Far East, which is, basically related to the container price, is there a direct, there was a big impact to the leasing business with one-way boxes, right? And we talked about this. Was there a correlation between pickup charges and new price of the boxes, or, is there some kind of correlation in terms of the production cost of equipment versus pickup charges being asked by the lines, right? Because they should have some sort of correlation, I would think.
So yes, we were saying basically that over the last 8-9 months, prices have been dropping, right? So I think we were at a peak about a year ago, and then the prices start dropping, and they still are, and I think they still will drop, given that there is this over inventory of containers, and this is also being seen on the pickup charges. I think there's a bit of a ripple effect delay, right? But I think also the average pickup charges, I think let's focus on pickup charges from China to let's say Europe, United States. I think we were at a peak somewhere around September, October 2021. I think the highest I've seen was $4,000 or $4,100 from China, I believe, to Salt Lake City. For 40 high cube. And so there is basically, as you said, a correlation where basically the price and the pickup charge, they're moving downwards together, right? One influencing the other. And maybe I can show you real quick. I made a little graph. I'm sure you can see my screen, but essentially
Yes.
this is the 40 high Q pickup charge ex-China from all the Chinese main ports. I can maybe also show you later, maybe a split between Europe and the US, for example. But essentially, prices were at a peak here, $3,500 in September. And this has been going down for months now. So I think, as I was mentioning, like the highest price we've seen was $4,100 for a 40 high cube ex-China to Salt Lake City. Right now, I even see suppliers paying users to move their boxes from China to the US. So I think not so long ago we saw some people moving containers to usually more inland locations like Denver, Memphis, Salt Lake City. And suppliers are paying the pickup charge, which is typically something that you would be doing if you want to reposition a container from Europe to China, for example. You as a supplier would be paying to reposition that box. So there is a strong correlation for sure. So the pickup charge and the container prices brand new in China are correlated. Agreed.
So I want to just take a moment to remind everybody that if you have questions, put them in the chat. I'm not sure if we have any here yet. I'm waiting to see some things pop up. But if you guys have any questions, we've only got a few minutes here left, about 9 minutes, and we're going to close this out. So if you have any questions, shoot them to us. We'll try and answer. I've got a couple other questions myself. And I think this could be for either of you guys. So what is the future of one-way movements, right? I mean, the one-way movements are, they become extremely handy to the liner companies in so many ways when demand is really high. But when demand is weak, there's an abundance of equipment. There's this constant effort of the liner companies trying to get equipment in the right place at the right time. What is the future of one-ways?
I will take this question, Mark. So let's take it that way, Mark, that I think the exchange has given a perfect platform to the world, wherein you imagine a world where there are no ownership of the container, right? And we all are using the container using one big fleet of container, right? Because finally, for a sustainable world, it is impossible that China keep producing so many containers and we flood the world with the number of containers. And that's exactly, let's not think container only from a pickup charge point of view. We all made good money when the situation, during last 24 months, because the pickup charges were high. But I think it's a time that I see a one-way as an excellent tool to evacuate container and making sure that wherever there is an imbalance between the demand and supply, we make sure that we avoid repositioning container empty. So exchanging container, well, if I have a business, say from Hamburg, but I don't have an equipment, then I will bring empty container, right? But somebody is having a surplus container and they are taking the container out, which is not good for the operational cost. It is not good for that environment, right? And there is no win-win situations. But today, thanks to this one-way concept, where we are able to exchange each other's container, and that is exactly where I personally see the future is very bright for the one-way. Also, I think we discuss many negative points about what we foresee in the near future, but also let's keep it in mind that if in 6 months, the sanctions on Iran will be lifted, there will be huge demand for additional container, right? Which will again boost the container price or the one-way demand. That's one. We hope that the war in Russia and Ukraine will end soon. Again, this will further help the global market, to grow. And most important, I keep repeating, shipping rates are coming down. There were many commodities which earlier global market were exporting, importing, but because of higher freight, They were unable to procure from the overseas market. But again, if the freight rates will start stabilizing, again, I see that the global trade will start increasing further. So which will again, increase the demand. And last but not the least, MSC and many other shipping line are expecting huge shipping ships, with the big fleet size in next 6 months, which will further increase the demand for containers. So these are some, positive points before I end.
So let me, on that note, so we've got a couple questions here. One of the questions is, at this stage, there's no shipping line prepared to accept SOC. Any suggestions how to counteract this?
You mean to say no shipping line is accepting SOC?
That's what this viewer is saying. He's
Not
difficult
really,
time.
Mark. So yes, the viewer, this is true before, but now they have enough slots available, right? And every shipping lines have started accepting SOC without any problem because they have enough space on the vessel.
Okay. There's a question here. We are involved in the CN-EU trade. Up to 8 weeks ago, there was a decent spread between COC and SOC in favor of SOC. Is that true?
Yeah.
Okay, and so I think this is the point. I think this is maybe the same viewer. Is I think he's saying this is why there's no shipping line accepting SOCs at this point. Does that make sense?
So, Mark,
This is a little bit out of my league. So I'm
it is as simple as that, right? If the liners will be flooded with the containers, right, they would not like to accept SOC container. They would like to use their container because container in depot, liners are still incurring a huge storage cost, right? So naturally, they would prefer, say, for example, today in Europe, the depot prices are skyrocketing. And it is not sustainable to pay €4, €5 a day every container, right? So everybody would like to evacuate and they would not like to take the SOC boxes. So there are pockets where we will see a problem. But overall, personally speaking, because I do have a huge SOC business, my team is not facing any problem in getting the space right now.
Okay. Okay. And then so someone's asking about the graphs. We will share the graphs with you, right, Greg?
Yeah, we
so
can do that,
we'll
sure.
share the PowerPoint graphs. So here's a question. There's an attendee here asking, can you touch on Africa in the context of our discussion? And I guess that would be what's happening in Africa right now with trade, and what's it look like moving forward? Does anybody have any idea about that?
I haven't had much interaction with Africa over the last couple of months that I've been working at Exchange. I think it's also unfortunate, but it's a market that we don't really see on the platform as of yet. We have some trading deals going on in the main locations there, Kenya, South Africa, but we don't have that much liquidity with regards to leasing. So I don't really have an oversight, no.
So I will add to Greg that I personally believe Africa is a continent which is full of opportunities. Still, a lot need to be done there. And this is a one continent together with an Indian subcontinent, which probably will drive the future growth.
Okay, excellent. So we are just about out of time here, guys. And there's a few more questions here, which we'll get answers for you on, and we'll send them to you in the PowerPoint. I believe you can get that through the link on the forum here. I want to thank both Greg and Supal for attending this and helping us answer some of these questions for us. It's a pleasure getting to meet you both and work with you, at least doing this. So
same here.
Hopefully our paths will cross again. Just a few things that I want to close here with. I'd like to thank everyone for attending the session. And again, special thanks to Greg and Supal. I'd like to remind everyone that the recording will be shared after the event in the follow-up email. Please also follow the link in the chat to give us feedback about the session and the summit. If anyone has more questions, you can contact the Exchange team via the link chat or in some of these chat rooms. The next session will take place at 14:30 That the name of that session is Make Your Container Movement Easier with Truck and Slot Booking on Exchange, where you can get more information about the new Exchange feature, about trucking and slot booking. While you're in the platform, you can join the container leasing and container trading networking lounges, where you can meet more business partners and hold interesting conversations on various topics, the ones presented here or others. And that's about it. So I want to thank everybody again, and thanks for joining.
Thank you, Mark. Thank you, Greg. Thank you.
Thank you so
all.
much.
Bye-bye.
It was a pleasure.